Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tsepho Modiba, and thanks for joining me. Tonight I'm joined by the ever dapper actually, Thabo Ncalo, founding partner at Savvy Capital Partners, for a look at what Thabo calls the mid-market opportunities in African listed space. Okay, let's unpack that. Broadly speaking, we're going to look at, I guess, the smaller businesses, stuff that we might not necessarily talk about on the show regularly. Correct. Okay, how are you doing, Thabo? You good?
Well, yeah, I'm perfect. Thank you so much. Look, I mean, it's an exciting space, you know, as you correctly said. It's mainly the kind of companies that they typically don't get much commentary on a lot of our shows, on a lot of the media and so forth, you know, but they still represent some of the greatest opportunity from valuation and from an opportunity to grow them.
Yeah, and we're actually saying before the show, actually some of the best gems from an investment perspective reside in the smaller businesses that, you know, the big boys ignore.
You know, there's an interesting, the latest Lions on the Move research report that McKinsey put out just in September, came out with research saying, if you look at the African corporate space, there are only 700 companies that have a sort of a revenue base that's about $500 million and above. Right. Only about 400 companies that have a revenue base of about $1 billion and above. Right. So you can imagine, out of a huge continent like this, we're still struggling to get you know, some of the big names out there. Right. And that means, of course, that the bulk of activities is happening in the mid-cap and more the smaller names, you know, that are operating and still running a lot of the economies, but aren't necessarily seeing some of the spotlight that we get.
I'm liking this. We're already positive. A good start to the conversation. Let's jump into a few companies. Where do you want to start?
So there are quite a lot of opportunities. So if you look at the space, and what we tend to look at is a concentration on some of these mid-cap or sort of mid-market companies. Right. So these are typically companies that have a market cap of below $100 million. Right. But have revenue growth that's quite strong. Right. So in looking at the sectors, what you typically will find that most of these names would be either family-owned businesses or businesses that have spun out of the corporate world. So or some of the corporate groups. So a start would be a business called Simbisa Brands, which is based out in Zimbabwe. Okay. Simbisa actually spun out of the big Insco, which is also listed in Zimbabwe, and last year in 2015. It operates about 415 quick service restaurants, typically trading as Pizza Inn, so Chicken Inn, fast food restaurants. They also have the license to operate Nando's in Zimbabwe, Galitos in Zimbabwe, and so forth. So it's a fast food a chain, growing quite a lot, but we call it about 40% of its revenue coming outside Zimbabwe, which is an interesting play, I guess. Yeah.
Okay, before we talk about the 40%, let's talk about the 60% within Zimbabwe. How are they doing operationally, given, I guess, the shortage in cash that we're seeing in Zimbabwe? And how is this issuance of these bond notes going to affect their business going forward? I'm assuming theirs is quite a cash-heavy business.
You know, it's been a big issue. I think the cash shortage has affected almost every business in Zimbabwe. Right. So if you look at the last quarter results that came out to end of September, it was a big issue where, you know, call it 60% or 62% of the business is struggling quite a bit because of cash shortages, because of the general slowdown we know of in Zimbabwe, you know. Right. With regards to bond notes, as we know, they only introduced a couple of days ago in terms of just towards actually the 28th or so of November. Right. So it's still early days, I guess, to see what's going to happen in terms of, you know, once they're fully in circulation, what the real effect is on the economy. But it has affected Simbisa in terms of the numbers in Zimbabwe. So you look at the total growth. Their revenue was up about 10% or so for the quarter, to going up to September. Yeah. And a lot of that growth actually was obviously coming from outside Zimbabwe. Right. And you're finding Zimbabwe being either flat or struggling a little bit to just come along, I guess. Yeah.
Okay, so I guess what does that mean then from an outlook perspective for this business, for this big chunk of their revenue base? Yeah, so
a lot of the expansion has been coming outside Zimbabwe. So, so you look at, for instance, out of the 415 restaurants I mentioned, about 116 of them are in Kenya. You
Good.
know, they're expanding into they're in Ghana as well. They've got
Right.
about 20 restaurants in Ghana.
Right.
So it's about diversifying the stream in terms of where the opportunity really comes from.
And what sort of, are they taking the full suite of offerings to the Kenyan market, or are they being nuanced?
So the brands they own, they call it the Inn brand. So if it's either Chicken Inn or Pizza Inn or,
Right.
or you know, some of the other Inn-related sort of brands they control. Those are typically the ones that they've taken as owner-managed restaurants into markets like Kenya, Ghana, and so forth. You know,
Right.
and of course they've got some brands that they franchise out to other smaller markets like Namibia and so forth. But it's typically their own brands that they take out, which is the Inn brands. And as I mentioned, they've got right to use, for instance, Nando's in Zimbabwe, Galitos, Cafe Vida, for instance, or Avida Cafe, apologies, in Mauritius and so forth. Yeah.
Sure. Okay. So then question marks around their core base in terms of revenue growth. The outlook for the remaining expansion on the rest of the continent?
I think that's actually where the opportunity comes in. So what we look at in terms of our fund strategy is look at providing expansion and growth capital to businesses such as these.
Right.
And that's precisely where the opportunity comes in, to provide them with access or expansion capital to grow into new markets, to diversify even further. So they're looking to go quite aggressively into other large markets like the DRC, where they have a presence, into Zambia, into other markets where they have a presence, where they can perhaps expand the product set, you know, the
Right.
service offering.
Right.
And that's where I think the opportunity comes in. I think that's where the growth is going to come in, where you find a lot more counters being rolled out by the group, particularly new growing markets. And as you know, fast food in Africa, the consumer story in Africa is real.
Right.
Even throughout this downtime in the economies in Africa, we've seen some of the consumer names and some of the FMCG brands staying quite resilient.
Well, this sounds like a good story. How much of this good story is priced into it? Is there still...
Interestingly, the stock has come off quite a lot. So at the moment, is trading on about a 14 times PE.
Right.
And you can compare that to sort of famous brands in South Africa or many other sort of retailers and see where the comparison is. It's trading at a slight discount to some of global peers. And of course, there's that Zim discount, I guess, that the market also puts in, you know.
Right.
But I mean, we certainly think it's worth a lot more than that. You know,
Right.
when I look at my own valuation of the business, when he was spun out of Insco, for instance, and where he's trading now, it's come off quite a lot over the last year. You know, and I think people have been selling the Zim market on political risk, on many other reasons. And I think haven't really priced in some of the growth that's really coming out of the name. Yeah.
Okay, we started off on a good note. Let's move elsewhere in the continent. Any other ideas that come?
So they're very interesting names. You know, you look at, for instance, some of the names that really hit us on the meat market space would be, for instance, Tall Gases in Tanzania,
Right.
that people don't really look at. They manufacture gases for the industrial base, for hospitals, for the medical industry, and so forth.
Right.
So it's industrial gases that very small company, about $21 million market cap.
Yeah.
Tiny, very difficult to buy, but would be a perfect sort of mid-market play or small cap, I guess, for a private transaction.
Right.
In Kenya, for instance, we're quite interested in some of the names that typically don't get mentioned, like Sasini,
Okay.
which is a tea business, a tea and coffee business, you know.
Right.
And as we know, East Africa is really a tea and coffee story, but you don't really get to invest in some of these names.
Let's spend a little bit of time on Sisini. Local production, I'm assuming, and manufacturing gets done in Kenya?
Correct.
Okay. And from a growth opportunities perspective, where are they selling? Are they selling within the Kenyan market or broader than that?
So there's, I mean, as you know, the export market is quite large as well for the business, for the Kenya, for the country as a whole, for East Africa as a whole. So coffee beans and packaged coffee that's coming out of Kenya and out of Ethiopia,
Right.
particularly, it's quite big on the export market. Right. So the export market is quite important for them. They also do packaging and sell into the local market,
Right.
and sell directly through various brands that they control locally.
In terms of that mix, I'm assuming the vast majority of their business gets exported.
Correct, yeah.
Okay. Now, from their perspective, valuations still command attention to a business like that?
So, I mean, this is almost an agriculture play, and one of the things I think that, you know, I have to mention on a risk perspective for this business is the soft commodity market. You know,
Always,
tea
yeah.
and coffee prices will fluctuate, and we've seen them, for instance, in the
So they're ultimately price takers.
Correct. They'll be price takers on the eventual end. So it's a question, I guess, what value they can add to their products. And as I've mentioned, they're doing a lot more packaging, a lot more value-adding work in Kenya itself on some of the products they produce. Not just being, I guess, a coffee farm, as it were.
Right. And the establishment of the brand, are they doing a lot of work in terms of bulking that up, advertising and things
so
like
that's
that?
been one of the biggest value adds in terms of the business growth of late, where I guess it's moved away from the commoditized, just selling coffee in bulk into moving more towards identify various brands. So they've got about 4 or 5 brands that they're actually quite strong into the market and been developing quite aggressively over the last couple of years. So it's certainly one to watch for. It still has a relatively smaller market share. For instance, on the tea market, they're still, I think, below 10% market share.
Right.
And I think from that brand building and so forth, I think that's how they can build a business and bring it up.
So if you can get a hold of the stock, this is one to look at.
Which is very difficult to get, as I mentioned, from a size perspective, $40 million market cap or so. Extremely difficult to buy off the local market.
Is it a really small
free float is tiny. Okay. It's tiny. I think there are quite a lot of institutional, insider holders, founders and so forth that have been in the business for many years.
Okay. Elsewhere on the continent, any other interesting ideas in the small
So I mean, I think you still have to look at a market like Cote d'Ivoire. I mean, Cote d'Ivoire has been sort of the darling of West Africa over the last sort of slumping, if you look at particularly what's been happening with Nigeria. So out of Cote d'Ivoire, I mean, with some of the names that interest me a lot, for instance, the rubber names, SAPH as an example is another business that's quite interesting.
Right.
It's come off, well, I mean, I think SAPH at the moment is about 80 or $90 million market cap.
Right.
So it's still a relatively sizable business, but still falls below that sort of $100 million we look at. The beauty with a business like that is that it essentially goes out and uses outgrowers to grow rubber, and they tap into the rubber market in terms of selling rubber into tire manufacturers, into latex manufacturers for the medical industry and so forth. So it's sort of way down in the downstream on the rubber side, but it's quite a good business to look at from a soft commodity perspective, and how it also adds value to the agriculture value chain in Cote d'Ivoire.
Perfect. Let's leave it there. We could keep this conversation going, but that's all for today. Thanks to my guest, Thabo Ncalo, founding partner at Savvy Capital Partners. That's all from Buy Africa this week. Remember to follow me on Twitter. That's at Modiba_Tsepho. And Thabo, yours is
at Thabo Ncalo.
There we go. Send us your thoughts about the show using the hashtag Buy Africa. From myself and the team, goodbye.